impact is limited to probably every 1% weakening of the rupee, I would anticipate between 0.3 and 0.5% improvement in margin.
All right. So that's an interesting view coming through there. Mr. Parpia saying that obviously owing to the kind of hedging strategies that are pursued in the very near term, the gains will be limited. And let's bring in also Urmil Shah. I suppose we have him back on the line. Urmil, we were speaking about the sensitivity of the rupee and the kind of sharp depreciation that we've seen, almost 1.7 rupees in the last 1 month. What would your pecking order be at this point? And to which company do you think the most benefits can come through for in the coming next quarter?
We believe that most of these IT companies would use any rupee depreciation to get growth, which is a concern right now. So we believe that they would reinvest any rupee depreciation in a higher growth rather than focusing on improvement of margins in the near term. So keeping this in mind, our pecking order amongst the mid caps is we like Cyient, persistent amongst the mid caps, and in the large caps we like HCL Tech followed by Infosys.
All right. Mr. Parpia, let's come back to you. I mean, we've seen the Trump election victory as well, and the Brexit also come through. But really, in terms of any solidified measures, nothing has been stated as yet very clearly. Can you tell us in terms of the risks that are still outstanding, possibly of an increase in minimum wages, maybe for the incremental new visas or for all of them? That's not clear. And the outcome of the Brexit, is anything clear at this point? Mr. Parpia, am I audible to you?
Sorry, I thought you were, yes, you are audible. I didn't know you were asking me the question.
Right.
Okay.
Yeah, so Mr. Parpia, I was asking you about the risks. I mean, post Trump's election victory.
I think there definitely is some risk, especially with H-1B visas, though there is obviously dependency even by, as was pointed out, by American multinationals, not only on using Indian companies or overseas companies H-1B, but also their own. So there is a vested interest. So there is a risk, however, nonetheless. So the minimums get raised, and then that deteriorates the profitability.
Mr. Parpia, specifically for your company, can you tell us how the impact is on ground?
For our company, is not that much at this stage because we don't have a large. In fact, we are less than 50% H-1B, so we don't pay those additional charges. So to that extent, for Geometric, it will be not much different, but I can't say about HCL.
Right. And can you tell us about the pricing environment as well? Because we saw Brexit panning out in the month of June, and probably there was some client uncertainty associated with UK clients as well. But on ground, is the sentiment reviving? Are client budgets opening up? And in terms of pricing, does the pressure on pricing continue to remain there? And the outlook on artificial intelligence as well as digital, do you see more scope going ahead from here? Because till now, obviously, these two command a very small portion of earnings.
So in our field, which I can talk about with more authority, is PLM. There is a growing demand. There's no doubt. It's increasing. And therefore, I see that there's no real pricing pressure that we come across. On engineering services, there are pressures that come about because they are in more commodity areas. You can count on there being more pressure. The more unique your services, of course, there is less pressure. So it's nothing new. As you enter into commoditized business, your pricing will come under pressure.
Right. Urmil, coming to you, I mean, we are in a quarter which is marked by more furloughs, lesser amount of business days. What kind of an earnings impact do you think this ongoing move in the rupee could bring about in this quarter ongoing?
So there will be two impact. The cross currency movement will also have an impact in this quarter, and plus there will be a benefit that could come in through the rupee depreciation. So we believe that a percentage point rupee depreciation could benefit the EBIT margins between 20 to 35 bips for the large caps. And the impact on the earnings will be dependent on how the hedging policy is. So safe to assume between 1% depreciation could lead to 2 to 3% benefit on the earnings front in this particular quarter. Amongst the companies which we have on our coverage, we think that Cyient and HCL Tech should grow at least 2 percentage points on a quarter-on-quarter basis. For the other companies, we expect the organic growth to be relatively softer.
All right. Same question to you, Sudhin. Where does preference and favor lie at this point?
I think the market is tight, as you rightly said, that this is not a quarter where, you have almost all days billable. There's a Thanksgiving holidays, which just completed, and there's a Christmas holidays, furloughs. So I think, generally the volumes are lower in this quarter compared to especially Q2 Indian. So we don't see, so that's one, typical trend. Second point is that we don't see the deals, movement has really opened up. So still, believe that this quarter the new deals and the ramp-ups will be continuing to slow. 2.5% sequential would be a positive number for the quarter. I think HCL surely I agree with the other speaker. I believe that even Persistent will continue doing well in that range. The larger companies banking on BFSI, telecom, manufacturing vertical will continue to struggle in that sense.
Right. And lastly, before we let you go, Urmil, coming back to you, we've seen some evidence of incremental under ownership in some of these large IT names. In the last week itself, the IT index was up almost 6 to 6.5%. Any possibility at all of some re-rating that you see going ahead, or that would be too exaggerated a claim to make?
So in the very near term, I think that would be very challenging because you have a seasonally weak third quarter, and fourth quarter will also have the overhang of as to what is the impact on the visa policy the US would actually bring in. So absolutely in the near term, I see a bit of challenge in a substantial re-rating. But over medium to long term, we believe that the current valuation of most of the large caps is very attractive. In fact, many of them are trading at a 1 year forward PER, which is less than the median for the last 3 years. So from that point of view, we find the risk reward very attractive for the IT stocks, and we continue to like HCL followed by Infosys amongst the large caps.
All right. And Mr. Parpia, if you can leave us with an outlook for the second